Have you ever wondered what stock traders actually do all day? You see them in movies frantically yelling on a chaotic trading floor. You see them on TV, staring at multiple screens with numbers flying by. But is that really what it's like? In the next 7 minutes, I'll take you through a typical day in the life of a stock trader. The routine, the risk, and the reality. First, let's clear up something important. Not all traders are the same. There are different types, and they do very different things. Day traders open and close all their positions within a single day. They rely on fast execution and short-term price movements. Swing traders hold positions for several days or weeks, looking for larger trends. Position traders hold for months or even years. And there are also traders who work for big financial firms, trading on behalf of clients. For this video, we're going to look at the life of a typical professional trader at a firm. The day starts early, very early. By 6:30 in the morning, a trader is already at their desk. They check voicemails and emails and read through the morning headlines in the Wall Street Journal or financial news sites. They need to know what happened overnight in markets around the world. At around 7:15, they join the morning call. This is a team meeting where traders, analysts, and salespeople discuss the day ahead. They talk about which stocks are moving, what news is coming out, and what their strategy will be for the day. It's like a sports team huddling before the game. By the time the market opens, they already have a game plan. At 9:30, the U.S. stock market opens. This is when things get intense. For the first hour, the market is chaotic. Prices move fast. Traders are glued to their screens, watching for opportunities. They're also on the phones, calling clients and other traders. A sales trader at a big firm might have 35 or more clients they need to check in with. They share research, discuss positions, and try to execute trades on behalf of their clients. Throughout the morning, traders are constantly analyzing. They're looking at charts, watching price movements, and using technical indicators like moving averages and support levels. They're trying to spot patterns that might signal a good time to buy or sell. As one source explains, traders use a dictionary of indicators, from support and resistance levels to moving averages and Bollinger Bands. It's not just guesswork. There's a lot of math and analysis involved. By around 11:30, things slow down. The market enters a quieter period. But that doesn't mean traders take a break. They're still monitoring their positions, adjusting their strategies, and preparing for the afternoon session. At 2:30, the market picks up again. Traders refocus on their game plan. They've seen how the market has moved in the morning, and they understand what risk they're carrying. The last hour and a half of trading is often the busiest time of the day. At 4 o'clock, the market closes. But the work isn't done. Short-term traders make sure all their trades are matched and cleared. They review their risk reports, update their journals, and record what worked and what didn't. Many traders keep detailed trading journals to track their performance and improve over time. They also spend time preparing for the next day, researching overnight markets, and setting up their game plan. By around 4:30 or 5, they finally head home. But even then, the job doesn't always stop. Traders often network with clients after hours. Dinners, baseball games, drinks at bars. This is all part of building relationships and exchanging industry information. It's not all glamour. It's a lot of work. Now, let's talk about what it really takes to be a trader. It's not just about buying low and selling high. Successful traders have a strict routine. They do research before the market opens. They set stop losses to automatically sell positions and limit their losses. They manage their risk carefully. Many traders limit the total loss of a trade to 1% of their total capital. That means if they have $100,000, they won't risk more than $1,000 on any single trade. This is about survival as much as it is about profit. They also need to be disciplined. The market tests your emotions every single day. Fear and greed are constant temptations. That's why many traders use a set-it-and-forget-it method, or follow a structured daily routine that includes preparation, execution, and review. As one trading educator put it, the daily routine includes morning market prep, an execution window, and an end-of-day review. This structure removes randomness and helps them avoid costly mistakes. So, what do stock traders actually do all day? They research, they plan, they execute trades, they manage risk, they talk to clients, they analyze data, and then they do it all over again the next day. It's a high-pressure, fast-paced job that requires discipline, emotional control, and a lot of screen time. A trader's life is not as glamorous as movies make it seem, but for those who succeed, it can be incredibly rewarding. Thank you for watching. Subscribe for more practical home finance guides.